Okay, so good morning ABM students. So I'm glad to be back and to be your subject in this business and accountancy in this second part. So this morning we will just be having a review from what we've learned last semester. But before we start, let's bow our heads for a short prayer. Let us pray. Our great God and loving Father, please grant us the wisdom as we will be learning accounting today. I pray, dear Lord, that you will please be the source of the wisdom, the strength that we need, especially for the students as they will be learning this online. Pray that you will keep each one of us. In Jesus' name, amen. So, as a review, last semester we learned about the elements of the financial statements. You still remember what are the elements of the financial statements? So I've written it here in the board. So the elements of financial statements is we have assets, liabilities, capital, income, and expenses. So by this time, when you say asset, you have already in your mind the definition, examples, and so on. But as a review, these elements, these are all that will be reflected in the financial statements. And let's review as well the normal balances of each of the elements in the financial statements. So the normal balance of asset is debit. So every time we receive an asset in our journal entries, that is usually debited. And actually, it's very easy. You've learned this already. We have only two out of the 5 elements. Only two is on, or the normal balance is on debit side, and that is expenses and assets. And the rest, the normal balance will be credit. So like the capital, income, and liabilities. So their normal balances are on the credit side. And let's give some examples of the accounts titles under assets. So when we say assets, example of the accounts title are, the most common one we have cash. Okay? So cash, accounts receivable, supplies, prepaid expenses, so they are under current assets. And the common examples under non-current assets or in the PPE, we have building, land, vehicle, equipment, furnitures, and fixtures. So those are examples of assets that will have a debit side. And then we have also liabilities. Example of liabilities, we have accounts payable, mortgage payable, notes payable, and earned revenues, and the list goes on. And then we have the capital. So capital is the capital of the proprietor that will be adjusted based on their income and withdrawals. So we have only one capital since we are under sole proprietorship. And for the income, in the income part, we need to consider if that is under service business or under merchandising business. So in the service business, it's very easy. We have service income. If that is the business is laundry, so we'll have laundry revenue, and if that is their rent, so that will be rent revenue. But under merchandising, the revenue will be transformed into sales. Okay, so no revenue that will be changed into sales. Every time you earn something that is credited as sales under merchandising. And we will discuss later the more thorough explanation about the difference between a service type and a merchandising type of business. And then we have also expenses. So we're very familiar with expenses. So we have rent, salaries, advertising expense, utilities expense, miscellaneous expense, and other examples of expenses. And the normal balances are on the debit side. Okay, so this is the things that we've learned. And aside from that, we also need to review the 10 steps in the accounting process. Can you still remember the 10 steps? So this is our goal in sole proprietorship, that as much as possible, we will be able to go through with these 10 steps and bring out the output, which is the financial statements at the end of this class. Or actually, we have already those outputs last semester. We're just reviewing it. So the first step in the accounting process is A. What's A stands for? Analyzing. So at this point of time, you need to know how to analyze. Okay, so the analysis is this a business transaction? Okay, so after you analyze, is this asset? Is this a liability? What is the normal balance? Okay, where will I place it is in my journal? Debit or credit? How much is the amount? So that is under the analysis portion. The second is, there's the second, journal entries. So after you have analyzed, you can make journal entries. Okay, journal entries is composed of debits and credits. Okay, the rule in journal entries will always, debit will always equal to the credit side. Okay, so that's the rule. The next is posting. So I hope this time when I say each step, you can see pictures in your mind, like what posting looks like. Okay, posting looks like a summary of the transactions that under certain accounts title. Example, when we say cash. So what are the transactions under cash for the entire accounting cycle? Okay, so that is posting. So you're going to post it there so that you will find out what is the ending balances of each of the accounts title. Next, what's the next? So we're done with analyzing, journalizing, posting. The fourth step is unadjusted trial balance. So after you have computed the ending balances of each of the account, you will create an unadjusted trial balance. So an unadjusted trial balance is just a 2-column with the debits and credits. And when you add everything, the debits must equal to credits. So that is unadjusted trial balance. And since that is unadjusted trial balance, the next step will be adjusting entries. So some of the accounts under unadjusted trial balance is not yet the true account or ending balances. We need to adjust it. And of course, this is one of the most challenging part in accounting, the adjusting entries. Actually, that's easy. We only have 5 adjusting entries. You've already learned that. And you can check your books and see or review what are those adjusting entries. And then after adjusting entries, we can now create our worksheet. So do you still remember your worksheet preparation? Okay, a 10-column worksheet. From unadjusted trial balance, adjusting entries, adjusted trial balance sheet, and income statement. So do you remember that wonderful experience you have in the class, right? So that is a worksheet preparation. A worksheet is not the paper we give to our boss if they will be asking us a financial statement. No, it's not. This is just a tool we're using to avoid errors as we create or prepare financial statements. So then after the worksheet, we can now prepare financial statements. So when we say financial statements, it's composed of different statements. The most common one is we have here balance sheet. So balance sheet is where the asset, liabilities, and capitals are reflected. And we have the income statement, which will give us the information as to how profitable the business is, where the revenue and the expenses, or the income and the expenses are reflected. So, other terms for income statement is the statement of financial performance, and for the balance sheet is the statement of financial position. And aside from that, we have cash flow statements, statement of changes in equity, and notes to financial statements. So that's the financial statement portion. So we're going to put all the information together to produce balance sheet, income statement, and other statements. After preparing the financial statements, there are 3 more steps to be done with this entire 10 steps of the accounting process. So we need to close the account. Okay, closing entries. Closing entries. Do you still remember closing entries? It's very easy. What are the accounts that we're closing? All the accounts in the income statements are closed. So at the end or at the beginning of the next accounting cycle, all our expenses and our revenues are in 0 amount. Okay, so all those accounts in the income statement are closed. They must have the 0 balances, and the profits will be closed back to the capital accounts. So So that's why if you want to increase your capital, earn more, okay, in your business. Then after that, you will have the post-closing trial balance. So after eliminating or zeroing out all the balances in the income statement, so we will create another trial balance that is composed only of assets, liabilities, and capital. And when we say trial balance, always remember, debits must always equal to credits. So do you remember the experience if they're not balanced? So don't freak out and or to find out where have we gotten wrong in those process. But I hope this time we can still have a lot of practice in making sure that our trial balances are balanced. And the last will be the reversing entries. Reversing entries is very easy. So most of the accounts in the reversing entries, you just need to go back to your adjusting entries. Okay? And we've already learned this. We have discussed this in the class. What are those accounts that will be reversed? When you say reversing entries, it's very simple. You just reverse. If in your adjusting entries that was on the debit side, in your reversing entries, you transfer that to the credit side. And vice versa. So, this is a very short review of the sole proprietorship under service business. And this time, we have already started last semester. We have started to journalize and perform the 10 steps in the accounting process under merchandising. So now, we will have a merchandising experience, another review, and we will polish our understanding as to the merchandising transactions. So, actually it's very easy. We have the same elements, same normal balances, same examples of the accounts title, same statements, only that we will add more, okay? In merchandising, we will be learning new accounts title. Okay, and I have already introduced that to you last semester. So, under assets, we will add inventories. Okay, so inventories will be added, that is classified under asset. Normal balance is debit. And for liabilities, almost same. And capital same, only income will be different, as I explained earlier. The income will be, instead of using income, we will be using sales. Okay. And for expenses, we will add more. So, in the sole proprietorship service type business, our income statement, actually the major difference lies on the income statement. Why? Okay, when I say income statement, I hope you can see pictures at the back of your mind, what a financial statement looks like, right? So, a financial statement starts with under service business, income or revenue, service revenue, less expenses. But under merchandising, there is something in between the revenue and the expenses, and that is cost of sales. Okay, so what is the cost of sales? So, as I told you, instead of using revenue, we're going to starting with the sales. So, I will send you a copy, and I will, in this video, I will be giving you some exercise problem, journal entries. You need to journalize transactions under merchandising, and we will be creating an income statement under merchandising. I will give you the exercise questions, and I will also give you the answers. So what you're going to do is, you answer it by yourself, then you check it by yourself using the answers that I will be giving you. Please do not memorize, okay? Analyze why this is journal entry, why this is how it will be presented in the statement of financial performance. Okay, so as I said, there is in between the revenue and the expenses. Under merchandising, we have more, and that is cost of sales. And this morning, I will also be writing some of the new accounts title under merchandising. So, we have sales. Sales is under the income or the revenue column. The normal balance is credit. And under sales, we have what we call the contra sales account and that is sales discount and sales return. Okay, so since this is a contra sales account, this is a contra account, the normal balance will be opposite. Once again, the normal balance of sales, because this is under income or revenue, the normal balance is credit. So if it's a contra account, the normal balance will change. So meaning the normal balance will be on the debit side. Okay, so of course in businesses we have not all the sales, some of the sales might be damaged or not in a good condition or not with wrong description or specifications. So the customer will return those goods back to you, and that will reduce the balance of your sales. That's why it will be on the debit side. And another is we have purchases. Okay, so what we learned last semester, purchases is under periodic, okay, inventory system. So we have the purchases account, and we have also contra purchases account, and that is purchase discounts,
purchase return,
and purchase returns. Okay, so actually purchases is an expense. Okay, these are expenses related to your goods, because this time we have the items transferred to the hands of our buyer. That's why there is what we call purchases. And what is the normal balance of expense? Debit. So meaning purchases is a debit balance, and all the contra account will be the opposite balance, and therefore the purchases and purchase return, purchase discounts and returns are on the credit side. Okay, so don't worry, I will give you exercise problems for this to polish your understanding as to sales and purchases. And another is what we call freight in. So freight in or transportation in is usually used interchangeably. So transportation in, this is also expense. That's why I told you the main difference, the major difference between service and merchandising lies in this income and expenses, or the income statement column, or income statement elements of the financial statements. So freight in, the normal balance is debit because this is an expense. So what is freight in? I hope you still remember. So any expenses or any freight costs you pay to the to bring certain inventories or certain purchases to be available for sale to your customers, we call that freight in. I think we have do you remember the animated illustrations that we have with the freight in and the difference between freight in and freight out? Okay, so freight out. They are also on the debit balance because they are expenses. So freight in is all the expenses to bring the asset to your store or the purchases to your store. Freight out will be from your store to the customer. If you're the one responsible to pay for the freight cost, that will become freight out. Okay, so that's why almost same concept. They're all expense, same normal balances, but they are different because freight in will be part of the cost of sales, while freight out will be part of the operating expenses. Okay, so freight in and freight out. What else?
Again, freight in.
Freight in and freight out.
Freight in is cost of sales. Right?
Yes, and freight out is operating expenses. So why do we need to separate this? Because freight in is inventoriable. So some of the costs may be deferred and considered as asset. While freight out, automatically, they are expenses. That's why they are part of the operating expenses. Another thing we need to understand in merchandising is, do you remember the FOB shipping point, FOB destination, who owns the goods in these cases? If ever your inventory sunk in the middle of the ocean, so how to identify who is the owner? So FOB destination, remember this, I have explained this already to you. FOB destination, the ownership will be transferred only from seller to buyer at the time the buyer received the goods or the goods reaches its destination. So if the goods was damaged, FOB or during board, free on board, so that will be shouldered by the seller because the seller is still the owner of the goods. According to law, the loss will always be suffered by the owner. So since the seller is the owner, so he will suffer the loss. You don't need to pay the seller in that case. But if that is FOB shipping point, once the goods reach the shipping point, automatically the ownership will be transferred to the buyer. So if you're the buyer, then you will be the one responsible or to bear the loss and rewards relating to that certain purchase. Okay, so that is a short review under merchandising transactions. So our next topic is, so in this case, I will also be giving some examples of the income statement under merchandising, and I will be sending you also problems, okay, and some will be your assignments, so you have to send back to me the answers of your assignments. And then what else? So just always remember the balances. That is very important under merchandising. And actually our next topic, we're done with the first two chapters in our book, the book that we will be using this semester. So just a very short overview with the next subject or the next topic, which is chapter 3, and that is the statement of changes in equity under merchandising. So do you think there are a lot of difference as to the statement of changes in equity under merchandising? So actually there's not a lot difference because we are still under sole proprietorship. We only have one owner. So the crucial point lies on the calculations of the income. If your income is wrong, of course your statement of changes in equity will be wrong. So make sure you have prepared the correct statement of financial performance, or else your statement of changes of owner's equity will be also wrong. But there will be a slight differences as to the changes in equity if we are under corporation. So in this chapter, the statement of changes in equity, we are given a little overview about what the statement of changes in equity looks like under a corporation. So of course in the corporation, there are a lot of owners. Okay? So when we say a lot of owners, we will be talking about a lot of capital. And there will be a lot of changes in capital of each of the shareholders. So we will have another video specifically for changes in equity under corporation when you receive your book, so that you will have also your reference as to what I will be talking about, since we have not discussed this last semester. And for the partnership, one or two more person contribute money and property to a certain fund with the intention of dividing profits among themselves. So meaning we'll be talking about also different or more than one capital account. So that will also change differently compared to the statement of changes in equity under merchandising. But later on, if you will enroll as an accountancy students, there will be more discussions with partnership, corporations, and changes in equity. So for now, this is just an overview as to some differences with the changes of owner's equity. And of course, the next topic will be about statement of financial position. So statement of financial positions is this class, or this video is for a review and an overview for this new topics in accounting. So here we will be learning as well what the financial position looks like. under merchandising. So the financial statements almost the same, the balance sheet will almost the same. It's almost the same as service type, only that we will be adding more accounts here. And then we will be learning about that. And we'll also discuss more about the statement of cash flows. We have not learned this yet. So the statement of cash flows as to how the cash flows inside the business. So we will have a specific topic for statement of cash flows. And then in this class, we will also analyze the financial statements. So how to analyze the financial statement, how to read the accounts, the amounts in the financial statement. So we will be learning that here. How to say that the business is stable, or how to say or how to know if the business is not stable. How to know if the business is profitable or not profitable. So that is the analysis of the financial statements. Then we will also have some introduction as to taxations and income and business and taxations, and we will also be learning about bank reconciliation. So how to reconcile the amount in the business and their amount in the banks. So pretty much we have covered the things that we need to as a sort of review, at the same time as an overview to our next class. So I hope you will be enjoying your day, and I hope you have learned something today. So I hope to see you in the next videos. I will just be leaving some of the exercises and the answers so you can practice in wherever place you are. So stay safe and have a good day.